Good morning, everyone, and welcome. We're very pleased to have you in this meeting. This is a series of 3 workshops on transparency of state-owned enterprises. My name is Juan Pablo Guerrero. I am director of the Global Initiative for Fiscal Transparency, and GIFT, with the International Budget Partnership, IBP, are working on the Fiscal Openness Accelerator, a project that addresses public participation mechanisms in the budget process and fiscal transparency. We express our gratitude to the US State Department for their support, and also to the multi-donor fund of OGP and World Bank that make possible this effort. Public participation and transparency are, as we know, very much linked, and they both required not only technical skills, but also political will and government leadership. And I'm very pleased to have around the table government representatives who are very strongly leading these efforts in their country. As part of the Fiscal Openness Accelerator, we work with Benin, Senegal, Nigeria, Liberia, South Africa, and other members of the GIFT network that learn and share their experience on participation and transparency with other members of the network. So this is an international network effort to learn from each other, to press each other, and more importantly, to cheer up each other when we do these improvements in transparency and participation. One of the difficult issues in fiscal transparency refers to state-owned enterprises. And we've decided to devote 3 specific sessions on the challenges of addressing transparency on SOEs. To talk more about the workshop and to explain its dynamics and to set the discussion, I'm going to ask my dear colleague, Lorena Rivero, Manager for Collaboration, Knowledge, and Technical Assistance at GIFT, to start the meeting. I'll be here, I'll be part of the discussion. Thank you again for your participation, for making the time. We know that in many countries, you're in the middle of the budget process, so even more, our gratitude must be expressed for investing in this important endeavor with us. Thank you.
Thank you, Juan Pablo, and thank you everyone for being here and being part of this session. We understand that exactly because of the moment of the budget you're in, many of your colleagues cannot be here. Actually, some of the country participants that wanted to present will not be able to present today, but they have asked to present on next session. So we are totally understanding what's going on. So therefore, the first thing to know is that we are recording this session so that we can share it. We're gonna try and record it in French and in English so that we can share it with you. And so that is the first thing I wanted to say. So now welcome to this session on reporting of SOEs in fiscal reports, reporting consolidation and benchmarking. These sessions, we have been designing them with Cavity. This is part of the project supported by the US State Department. And we have 3 sessions in hand. So today it's the framing of the SOEs reporting in the context of fiscal transparency. So what does it mean? We know this is a very complex topic. That is actually why we wanted to do these specific 3 sessions on SOEs, because it has its own complexities, different than the rest of the budget. Session 2 will be on information flows for reporting SOEs transactions with government, including integration through FMIS, through the systems. We have interesting experience that's going on around this integration with FMIS. And session 3 will be on reporting and management of guarantees to SOEs and the link with fiscal risks, which is something important that we want to also look through. During the session today, we are going to start with this context of SOEs because we want to make sure that we're speaking on the same language, and I'm not referring on interpretation. Interpretation button is right there for the French, but that we all know what we are meaning with SOEs. We're gonna have probably not right now, Benedict, the director of SOEs unit, but we're gonna have him on next session. From Nigeria, we're gonna see the presentation of the budget office and the progress. We're gonna have Benin, Senegal, and probably Cameroon. We didn't have you in the agenda to present, but given that you're gonna be participating, we hope that you want to share with us. And finally, we have a great session with Jason Harris from the Fiscal Affairs Department of the IMF. He's going to be speaking about public sector balance sheets, which is a very important topic that will allow us to consolidate and look at the overall picture of public finances. So that is on the sessions. Session 2 is going to be on Thursday. We're going to have, of course, our welcoming remarks, SOEs health check with the Fiscal Affairs Department of the IMF. I see Sibi Hira here already connected. And he's going to be presenting on this. And we're also going to see ongoing work on information flows and integration issues process with Cavity. As you can see, we are collaborating on this with Cavity. And finally, on the third session, we're going to focus only on guarantees, gaps in recording, and fiscal risk statements. Finally, we have the presentation of fiscal stress tests applied to COVID-19. And this is going to be presented by AfriTac South. It's a new methodology that we think it's going to be very interesting, not just for the moment, but actually in the consolidation of this, the SOEs and why this is important for seeing what's going on with public finances overall. So we're very thankful to AfriTac South, West, and West too, for their participation on these sessions. We're very thankful also with Cavity for taking this endeavor with us. We wanted to bring together the different international organizations that are already working with you on this topic so that we are all together hearing the same thing and we can share questions and answers as well. So we want this to be an open conversation rather than a webinar where everyone just listens and don't interact. So we're hoping this is a more interactive option where you can actually have a lot of time for questions. You have great experts here with Sibi, we have Jason, we have Danielle, we have a lot of experts around the table that you can ask to as well. And with that, I will start with the first part of the session. That was my housekeeping rules. And please be sure to share any questions that you have on the chat. Okay, so we're gonna start with this part of framing of SOEs and reporting in the context of fiscal transparency and progress in FOA countries. So
Lorena.
Yeah. Am I speaking very fast?
Since you said we could pose questions, I'm
sure.
Showing everyone that we can always raise our hand and say, hey, I have a question. Just to make sure, thank you, Lorena, colleagues, that French speakers are following the webinar in French. I just want, je veux être sûr que les francophones suivent.
I just want to be sure that the French speakers are following. You have the French button there. I thank you. You have the floor, Lorena.
Thank you, Juan Pablo. And yes, I hope you're all following with the translation that corresponds, and you can ask in French in any case, also in the chat. So feel free to do that. Okay, so framing of SOEs in the context of fiscal transparency and progress in FOA countries. So we have been speaking about these fiscal openness accelerator countries, and this is some of you have the context of this, but from IBP gift, we have been working on this fiscal openness accelerator, looking at public participation. But to achieve a good public participation, you need to have good fiscal transparency so that everyone has the complete information to participate in an informed decision making. So as part of the FOA and the Fiscal Openness Accelerator project, we have established certain objectives. And those are supporting this, the governments that are part of this project that are Benin, Liberia, Nigeria, South Africa, and Senegal, in timely publication of the 8 key budget documents, improving the comprehensiveness of budget reports. And then we have some specific country indicators based on findings of the United States Fiscal Transparency Report of 2019. Some of you have already made some progress on the 2020, particularly Benin. And finally, we're going to be working on the user orientation of fiscal transparency that will support the public participation mechanisms. Based on this fiscal transparency report for a couple of countries, and I just wanted to remind what are these findings and what brings us here to state-owned enterprises workshop is for Benin, we see that one of the findings is that the need of expanding information on both revenues and expenditures, including transfers to and from state-owned enterprises. We have a similar one for Nigeria that's detailing allocations to and earnings from state-owned enterprises. For the case of Liberia, Liberia has made a lot of progress already on reporting of state-owned enterprises. And we have been working on improving the comprehensiveness and reliability of the reports. It doesn't mention particularly state-owned enterprises. However, it's also a thing that that it's important to tackle regarding reliability. What do we mean with this? So state-owned enterprises have many different things. And this is something that came up in the meeting that we had in March in Pretoria. What do you mean by state-owned enterprises? So these are known as government corporations, public enterprises, public sector units. So they can have a different name. However, what is important is that these are state-controlled, majoritarian or minoritarian, depending on the national rules for this. The definition varies nationally, and there is not a particular one for this, but there might be categories of state-owned enterprises inside of one country. But these state-owned enterprises have full majority or minority ownership by the government. That is an important aspect. Government shareholds part of through pension funds, asset management funds. They can vary by the level of government that owns the enterprise, being it federal, state, regional, local. These can have different aspects, and that is important for the reliability and comprehensiveness. They can also vary by the way in which the enterprise was founded, what is the objective of the SOE, and the status, for example, in privatization, because many of these enterprises are going through this privatization process. So as you can see, the definition might vary, but the important thing is that we have a complete view of what is this, what are these transfers and what are being these cash flows between state-owned enterprises and the central government, as well as guarantees that the government is providing to these state-owned enterprises to have the complete view of the health of public finances. And here I have the GFS manual for where it's defined as public corporations. And the manual has this very useful decision tree for classification of public entities, and particularly here on the public corporations, how to categorize them. So in case in case of doubt, we can always go to the GFS and look at the categorization of state-owned enterprises. I wanted to have a poll here, but I think I cannot open it. So I will just leave it as a reflection unless, Albertina, you can tell me you can open it. No.
Bonsoir.
Bonsoir.
Good evening. Thank you. We were saying that there are various types of definitions for these SOEs according to the local law. It's a company where the government has a majority of the capital. If it's a minority, it would not be SOE in our definition as it stands. Thank you. That's a very clear definition.
And to your poll, it's there.
Excellent. So the first step to have good reporting of SOEs is having a good definition of what SOEs mean, because then we can actually see what is being left outside. One of the complications that we have been working on with some of the countries that are here represented is that sometimes the definition is there, but it's not completely clear or not detailed enough to categorize SOEs. So having a good SOE definition is a good first step for identifying this. If anyone else would like to share a definition of your country, please raise your hand. Otherwise, I will move to, yeah, unfortunately, I was not able to share the poll, but next time we'll figure out the technicalities of this. Okay, so for the evaluation of how transparent and how this reporting is being of allocations.
Lorena, sorry again. I'm your interrupter. There, you have the poll. So you probably cannot see it because you're sharing your screen, but Albertina shared the poll, and 69% of our attendants responded that yes, there is a national definition of SOEs. On the no side, there was 0, and 23% said they didn't know. And then 8%, which must be 1 or 2 of our participants, they went to yes, but it is not clear or lacks details. So that's the result of the poll. It worked. Thank you.
Thank you very much, Juan Pablo. It is very useful also to know how you stand. And I have Birahim's hand up.
Birahim, allez-y, allez-y, on vous écoute.
Oui, bonjour.
Bonjour, monsieur.
Hello, good morning, good evening. I just wanted to share our definition in Senegal for SOEs. It's a bit similar to what our colleague from Benin said earlier. It's defined in the law. It's industrial and commercial public companies and companies that are controlled by the state, if we can say. It's where the state is the only shareholder, or it could be majority, in other words, over 50%. That's pretty much our definition, which is enshrined in our law. Thank you very much.
Thank you very much. That is very useful indeed. Okay, so we know that we have some definitions out there in law. Now, About the evaluation of reporting and transparency of SOEs, we have our three main evaluations. That's the Open Budget Survey, Fiscal Transparency Evaluation, and the PEFA report. So question 37 of the Open Budget Survey asks if the executive budget proposal or any supporting document present estimates of transfers to public corporations for at least the budget year. So that is one that some of you get correct, but we have 2Ds here. So yes, estimates of all transfers to public corporations are presented with narrative discussion. We have Liberia and South Africa. With a B, we have Senegal, C, Nigeria. And with D, we had Benin and Cameroon, but I would expect this is changing already with some of the changes that you're doing already and progress. So I wanted to share with you Liberia's draft budget 2021 and to share one of these countries' reports and what is the how it looks like and why they're getting an A. So I hope that person, Benedict from Liberia, is already here. He was having some issues joining us, and he can talk more about this. But however, the point is, you can see the revenue estimates here, and you can see the expenditures as well. And then there's some table for each of the state-owned enterprises that looks more or less like this. Of course, for each of them, it's a bit different. And they send this information to the Ministry of Finance. If there is one public corporation that did not send the information, that is also disclosed as part of the report. It says the state-owned enterprise did not report, and they are not fulfilling the law on reporting. So that is what they're doing. For the Fiscal Transparency Code of the IMF, we have the dimension of public corporations where we would be expecting the publication of comprehensive information on financial performance of public corporations, including any quasi-fiscal activity undertaken by them. And we see only Senegal has an evaluation of this, of the Fiscal Transparency evaluation of the IMF. However, what we can see is for achieving an advanced practice, we need all direct and indirect support between government and public corporations to be disclosed. So for that, we also need to be registered, and that's why we're also having a next session on registration of information flows. Here we have some of this and why this is important, and Jason can go a lot more on this, is the approach of the IMF is how these cash flows and flows between public corporations and the government can impose important fiscal risks for the national budget. So this is the case of Liberia Fiscal Transparency Evaluation that we can see here, and we can see fiscal contingencies that can be very clearly identified, explicit and implicit, and there is still a need to report better so that we can detect these fiscal risks on time. And finally, for PEFA, we have two moments where these public corporations transactions and transfers between national government and these public corporations are registered. That is PI6. For central government operations outside of financial reports, both for revenue and expenditure. And then we have the management of assets and liabilities, fiscal risk reporting. We have some evaluations here that have been already done, but most of them are with still the previous framework. So we're looking forward to seeing Liberia's and Nigeria's evaluations that are ongoing, and that will bring new information of how these are being reported as well. That goes in deeper than the OBS that gives us an idea, but this one goes a lot deeper into the comprehensiveness of the information. So that's how we are. And now next up, we're going to you, for you to share. I am not sure if we have Benedict here now. If you can, no, I think we don't have Benedict. So we can go to Jinkanwa from Nigeria, who's going to be sharing the progress of including allocations to and earnings from SOEs in the budget documents. I'm going to stop sharing my screen and send it and give you the microphone, Jinka.
Am I?
Hi, Jinka.
Where am I?
We can hear you.
We can hear you well.
Uh, Hi, can you hear me?
Yes?
Can
we
you hear me?
Yeah.
Yes.
Hello?
Yes, and also let me just say we're very happy to have you here, Ben from Nigeria. If you want to intervene as well, let me know and I can pass you the mic.
Okay, my name is Gini Kanwa from Nigeria. I'm representing, I just want to make a few comments as regards Nigerian progress with respect to our SOEs participation on the national budget. I don't know if I can share a few slides, if that's okay.
Yes, you can share your screen now.
Yeah, for Nigeria, we started with, we had issues with the gaps we had identified by way of fiscal transparency. If you go through the slide, let me just take it back a little bit. You will see the outline there. We just have the background, the progress reports on the implementation we've done so far. Now for Nigeria, in 2020, the federal government made some significant steps towards the inclusion of the GOEs in their national budget. I can't see this. And this helped us to be able to have more transparency as regards the national budget. Now the plan was to incorporate all GOEs, which we can always use the nomenclature as SOEs. Now for Nigeria, we have GOEs slated or categorized into three portions. We have the self-funded ones, the partially funded ones, and the fully funded ones. In 2020, like I explained before, the government made a step and included what you call like the top 10 GOEs into the national budget. Now, the main reason for doing this is to align the national budget in such a way that the full revenues and expenditures are fully captured, to have budget consolidation as you have it, to reduce the what you call the gaps with respect to timing of the budget timeliness. So we first incorporated the 10 GOEs. Now for 2021, we moved forward, and this is what our progress report looks like so far. We took the 60 additional agencies. Now for the categorization, on the national budget, those that are fully funded are those that the federal government funds their personnel, their overhead, and their capital. Now, these categories of agencies, they would usually prepare their budget on the GIFMIS, and this will be picked. Then the partially funded ones are the ones that the government funds them either on any of the three lines, either the personnel, the overhead, or the capital. So allocations are made with respect to the national budget. And this is prepared, these two categories of agencies prepare their budget on the GIFMIS. Now, if you notice the first categorization on the self-funded, these are the agencies, so to say, government-owned agencies that have their own revenue. They are yet to progress into the GIFMIS platform. However, we still capture their revenues and their expenditures into the national budget when we prepare the MTIF, and this all goes in. So the only difference with that category is their budget is still not yet being done on the GIFMIS. So while the partially funded and fully funded have their budgets on being prepared on the GIFMIS, the self-funded, we just incorporate all their budgets into the national budget by way of MTEF. Then they give us their 3 years plans, and we're able to incorporate that. Now, there are also other ongoing measures for the GOEs in terms of the self-funded ones. Like I explained initially, these agencies, they are yet to be captured or prepare their budget on the GIFMIS. So there are also ongoing laws to be able to do that post in the next budget, which will be like the 2022 budget. So that's one of the few gaps we know we are going to work on in the next budget. Then the whole idea is also to ensure more transparency in all that is going on by way of GIFMIS, EPs, all the structures and systems we have in place that enables us to have more budget transparency and physical consolidation. So that is how we have fared. Then there are plans to have sanctions on the state-owned enterprises that fail to operate within the stipulated regulations. We have plans to make sure that the allocations that have been given are being abided to by the GOEs, and that they work within the budget that has been allocated to them. So that's the progress we have made so far. Then in terms of reporting, we have other things that we do at the budget office. We insist on what you call the reporting timelines. And the reporting timelines will work with what you call like the performance management framework. And in the performance management frameworks, GOEs are meant to report quarterly on what their revenue and expenditure performance has been. And they're also meant to show us what has been remitted to the Consolidated Revenue Fund by way of operating surplus. So every quarter, the GOEs submit those 2 documents, and we're able to track, we're able to monitor and see how they have fared, if they have worked within the budget allocations, budget ceilings, and what has gone back to the federal government by way of its operating surplus. Then at the end of the year, we also have, as part of the measures we take to see that what we have put into the national budget, the way there's been consolidated works, we also look at their annual reports to be able to see that they have confirmed and they are in line with what the budget allocations has already determined prior to that time. So that is how the progress we have made so far. So Nigeria can actually say that we have been able to integrate the GOEs into the national budget. In 2020, in summary, we started with the top 10 agencies. For 2021, we moved it up to 60, and we have plans to include more in next year. But to state that those who are fully funded, that is those that government gives money by way of personnel, by way of capital expenditure, by way of overhead expenditure, they fully prepared their budget on GIFMIS, and that is fully integrated and captured in the national budget. Then those who are also partially funded, same thing applies to them. And going forward as part of the implementation plans to see that they adhere to these allocations, Nigeria has also insisted and has, in the last 2 years, enforced the performance management framework to the extent of having the full revenues and expenditures that have been spent, been disclosed, and seeing the operating surplus or the dividends that has come in by these companies being paid into the Consolidated Revenue Fund. Thank you.
Thank you for this great overview. I think it lets us wanting to know a lot more. Hopefully you will be joining us on next session as well on checking out the diff myth, because this is a great progress. We're gonna have time for questions. Right now we had space for Afritac West 2, and then I am going to give the mic to Danielle Cerebro from Cabri. With this changes in the participants who are sharing, I skipped our collaborator of Cabri, who is actually co-hosting with us. So I am sorry, Danielle, for that. Let me just take it to Afritac West so he can respond on the progress that's going on right now with Nigeria and Liberia.
Thank you very much. My name is Kubai Hasiani. I am PFM Regional Advisor at the Afritac West 2 office. And we cover both Nigeria and Liberia, and support them with technical assistance in the area of SOEs. I'd like just to mention that this year we have been working with both Nigeria and Liberia. We provide capacity building where the countries request, and for this year, both Nigeria and Liberia had requested for technical support. Now let me start with Nigeria, who have just made their presentation. We have been to Nigeria, but for related areas of assistance. We haven't in the recent years provided specific intervention in the SOE reporting, which is the area that they would like maybe support on. The requests that they have given is for us to support them on the enhancing the oversight of the SOE performance, looking at their reporting and looking at their budgets and providing recommendations on how that can be improved. Now, we have not been able to do this. We had programmed to do it within the year so far because of the COVID-19 pandemic. The mission that we would have had to Nigeria has so far not been agreed on with the authorities. And therefore, we're still hoping that within the year, we can be able to provide them with assistance. We were hoping that the mission would be able to be sort of a mission to review their current arrangements for SOE reporting to the budget office of the Federation, and to look at what the format of the reports, the content of the reports, and to see what standards they are using to report, and to be able to advise them on how this can be improved, so that as much as they currently having this on the budget, there could be elements that are being missed out given the type of reporting that is actually being done. So it's true that Nigeria have made a very good progress in terms of having a number of the SOEs being captured on the budget. We noted that when we had a mission there last year on strengthening the medium-term expenditure framework. But it's also important that we look at how those reports are structured, what is the content, and whether in fact they are capturing the necessary elements that would be able to reveal the underlying gaps, if any. So for now, I would like to say that there isn't a lot that we can say about the SOE reporting in Nigeria, because we haven't had a mission yet on that particular subject. The last mission that we had related to SOEs to Nigeria was in 2017, and so issues in what they are doing. And also to be able to look at budgets that they have been able to, to look at the loopholes, look at the gaps, and make improvements as required. That's for Nigeria. Now, the representative for, the representative for Liberia was not available, but we have had a mission to Liberia recently. Sorry? Hello?
Why? I think.
Hello?
Yeah, we can hear you.
Yes,
right?
is there some?
Yeah, I hear you.
Yeah,
we
there
hear
was
you.
some other
Yeah.
people talking. I wasn't sure. Yeah, okay.
Thank you.
Oh,
Yeah.
yes, we have recently we had a mission to Liberia on the invitation to look at the SOE reporting and to look at what gaps they have and to recommend improvements. Now, we have had we finalized that report in September, and we have shared the report with the authorities. Now, so far, the authorities have they have accepted the report, but they have not yet formally, adopted it. So, as far as the situation is concerned, the report is still as an official. And but I'll just make some general comments because I would not like to start quoting the report before they have, looked at it and accepted to publish it or to make it official. I just like to say that yes, I think Liberia has done very well in terms of consolidated reporting. They have brought on board a number of the SOEs. Most of the SOEs are included there. So far, they are having about 16 SOEs included in a consolidated report. But we, of course, noted a number of gaps, which we have shared with them, including the fact that, of course, they are using different standards to do the reports. And so the consolidation is obviously, affected by the fact that different entities are reporting under different standards, IFRS or US GAAP or IPSAS cash, and these are affecting the consolidation. So what they have actually is an amalgamation of the reports and not a consolidation, because at the end of the day, when they are different frameworks, it affects the final product. And of course, we also noted that they have a revised PEFA Act, which provides for the reporting under IFRS, but they don't have detailed regulations to be able to guide this reporting. So that is something they need to do. They have, of course, need to also to improve in terms of making sure that they have clear policy direction on some of the standards they're using, so that there's consistency in reporting. And the SOEs also are not all included. A number of them are still out. And also they have, when you look at the report, there's some significant deterioration in the overall financial situation between 2016 and 2018. We were not able to really find out what were the reasons, because that would need a much more detailed analysis of the reasons behind that. We were just looking at the gaps. And then, of course, this is a very good progress they have done, but I think there is a room for improvement. Some of the general recommendations I would just mention for this purpose is that they need to widen the coverage to make sure that most of the SOEs or all the SOEs are reporting. And they should also be very clear on the standards they want to use. If it's IFRS as required by the law, then that should be clearly made. And also, not all SOEs can then report on IFRS, because some are purely commercial, others are social, and that difference should be made very clearly, which SOE should report on IFRS and which one cannot. They need to be, the regulations need to be put in place, they're not. They need to better focus on the issues of,
I'm sorry, I need you to wrap up.
Okay. Generally, I think the most important thing I would like to say, they need to develop an IFRS roadmap, which is aligned to supporting a training program. And we are agreed that we are going to provide them a training to help them to make sure that they are reporting on international financial reporting standards. Thank you very much.
Thank you very much. I think this is, and I wish we had also the people from Liberia here, because this is a very comprehensive overview of what is there and what is still missing. And we see that Nigeria has done a lot of work. And this idea of not only reporting, but the comprehensiveness and the quality of it takes me very well to Daniel Cerebro from Cabri, who has some slides on particularly the reporting and what are the challenges in the region. So I'm going to be sharing the screen for her, and then I'm going to open the floor for questions.
Thanks so much, Lorena. Thank you, Lorena. And to the other colleagues from GIFT for inviting us to collaborate on this important series of events. So as today's a framing session, I'll just share some general thoughts on why SOE fiscal reporting is so important, and also some observations of challenges and trends from the work we've done with countries in sub-Saharan Africa. Thanks, Lorena. Great. So why does fiscal reporting matter? And I think most of us on this call will be quite familiar with this, so I'll take you through it quite quickly. But we know that SOEs account for a significant share of public sector balance sheets in sub-Saharan Africa. Recent IMF research shows that SOEs have liabilities averaging 20% of GDP, assets of about 32% of GDP, revenues that average 7% of GDP. You get the picture of the importance. And in the past decade, there's also been a substantial shift in the structure and function of the state. And that's from the direct provision of services to the facilitation of services through new fiscal tools. And these have primarily included guarantees of SOE debts. And this, as we know, has resulted in a major increase in government's exposure to the explicit, which are the legal contingent liabilities, and a repositioning of credit risk to the government. In some countries, like Cameroon, Ghana, South Africa, contingent liabilities have reached 10% of GDP. So given the significance of the SOE sector to the fiscus and the significant risk posed by contingent liabilities, timeliest, accurate, and comprehensive financial and non-financial information on these quasi-fiscal activities, which are operations, activities that are undertaken by SOEs that affect the public sector balance sheet but don't affect the traditional budget deficits. And these limit, and by encouraging fiscal reporting, we limit risks to the fiscus. We increase budget credibility by increasing the comprehensiveness of public sector reporting. And crucially, we also allow for informed allocative decisions and thereby allowing for achievement of allocative efficiency. And this is where the SOEs are fully funded, partially funded, or not funded at all. And it also, this transparency allows the executive to understand, assess, and monitor fiscal risk, and also importantly, mitigate against debt distress. It allows the legislature to review performance and ensure they're operating efficiently, and for citizens to demand accountability for service delivery. Transparency, communication, coordination, particularly between the Ministry of Finance and state-owned enterprises, also ensures that policymakers are cognizant of SOEs' needs and are less likely to implement policies that will negatively impact on SOEs' commercial viability. And finally, in terms of why it's so important, SOEs that are able to borrow off their own balance sheets It's also important that investors have clear and frequent reporting from these SOEs. Otherwise, they charge a premium for uncertainty, leading to increased borrowing costs and a reliance on government guarantees. Thanks, Lorena. So some observations from the countries that we've worked with on SOE and SOE governance, reporting, capability development in sub-Saharan Africa. So some of the things we've noticed is that there's often an absence of an effective legal and regulatory framework for information sharing and reporting. There's also data limitations in terms of budget estimates and reporting, and these occur as a result of fragmented accounting systems, lack of verifiability of data, and other points. Specifically in South Africa, which is generally regarded as doing quite well in PFM measures, there are often issues with verifying in-year data, as there's no interfacing or integrated monitoring tools. We've also seen again in South Africa that smaller public entities often don't have adequate capacity to present financial and non-financial information to their boards and to oversight bodies, which is part of their statutory responsibilities. Then contingent liabilities are also often treated as off-balance sheet items, you would know that. So inherently transparency is often neglected. There's also limited information sharing and monitoring mechanisms to track the servicing, the debt service of guaranteed loans. Though we did hear at a recent CABRI event on contingent liabilities that Liberia is planning the opening of an escrow account at the central bank, where interest payments to service debt of SOEs will be deposited and paid from. And this should, for all purposes, make monitoring of payments easier and reduce the risks posed by contingent liabilities. We've also seen poor quality and unavailability of data identifying and quantifying risk, including credit risk. And this limits continuous risk assessment of the financial soundness of SOEs, posing even greater risk to the fiscus. We can go to the next, thank you. So this is my last slide, and we've also seen that SOEs often don't adhere to international accounting and auditing standards. Specifically, we've observed across countries that standard charts of accounts are not commonplace in SOEs or public entities. There are also often issues with the internal audit function. We've also seen that annual financial statements are not subject to an external audit. And all of these compromise the quality of disclosed information. It limits consolidation, comparison, and also prevents data-driven policymaking and accountability. We've also seen that very few countries, and some exceptions here would be Angola, Liberia, and Malawi, very few countries produce aggregate reports on SOE activities and performance. And you probably all know that regular aggregate reporting allows for a comprehensive picture of the overall performance of SOEs. It also allows government, as the owner of these enterprises, to improve reporting systems of these enterprises and improve consistency in information and deepen their understanding of SOE performance. And also, because there's limited access to relevant operational data, government, as the entity's owner, is unable to detect or correct inappropriate business models, capital structure, and operational inefficiencies. And as we'll discuss further on Thursday, we found that information systems are generally ineffective in SOEs and also fragmented. And this has resulted in inaccurate, outdated, missing, or unusable data. And then finally, from me, we've also seen that there's a lot of ineffective institutional structures, even outside the SOEs. So particularly here, ministries of finance or departments of public enterprises to collect and analyze information. And there's also a lack of information sharing and coordination between monitoring and oversight bodies outside of the SOEs. So thank you so much to everyone. I'm really looking forward to the next, for today and the following 2 sessions. Thanks, Lorena. You'll have to unmute yourself and I'll unmute myself.
Thank you very much, Danielle. This is very useful, and actually it highlights many of the things that were commented right now about the case of Liberia that's doing good reporting, but then we have to look at the quality of information. Thank you, Danielle, and thank you for being part of this to Kawari. Extend our thanks to the team and to Neil. So now I wanted to open the floor in case you have any questions, whether it's for Danielle, for Nigeria, regarding how they are doing their reporting, or to Kubai from Afritac West. If you want to make a question, just have to raise your hands. Giving a couple seconds so that you can reflect. And otherwise, I am going to Piero. Piero. Yeah, I thought we had you here already. If not, the floor is yours, Amadou from Senegal.
Oui, bonjour.
Bonjour.
Yes. Hello.
Great.
Hello. Sorry. Yes.
Excellent. So now
How are
the
you
floor
doing?
is yours so that you can share with us
Thank you.
your progress. Thank you.
Voilà, merci de me...
Thank you. Thank you for giving the floor. My name is Amadou. I'm director. I'm not sure if you can hear me. I'm not quite sure about the connection.
Merci bien. Donc, voilà, donc je m'appelle Amadou Birengue, directeur du secteur parapublic.
I'm the director for the public sector, and in the time that we have, I would just like to say a couple words about our parapublic sector in Senegal before I give the floor to my colleague in charge of financial operations, and he will tell you how we've succeeded in implementing various aspects of the budgetary process. The parastatal section is in charge of following the autonomous public companies and extra budgetary activities. Those are areas that do get subsidies from the state. At the same time, our directorate is also in charge of managing other parts of state companies, whether they are public actually or private, and it's important to point that out. And it's in that context that we are in charge of collecting data from organizations, the state companies, also just state bodies, but also state companies, and we use them to produce statistics and get a feel for the situation. This is the information I wanted to provide you with. Please allow me now to give the floor to my colleagues in charge of these activities who have prepared an presentation, who will certainly enter into greater detail to enable you to understand better the situation in Senegal and ask your questions. Juan Pablo, if you agree, I will now give the floor to the director of the accounting and statistics section, who's in charge of all the data that we collect and their processing. Thank you. Hello, everyone. Masamba is my name, head of the statistics section. As the director of the parastatal sector just said, I will give the floor to Wakata, who will actually do the presentation on the processing of statistics about the public sector and public companies. Wakara, can you hear me? You can take the floor. Yes, thank you. Yes, go ahead. Thank you, Director. Thank you, Mr. Jin, thank you for inviting us to this meeting so that I can share I'd like to share the screen with my presentation, if I may.
Please go ahead.
Yeah, okay.
Yeah. Welcome, Boca.
Thank you. Emil. I want to share the
Is he allowed, Lorena, to share?
Yeah.
I want to share it.
Yeah, there is no restriction, no?
Hein?
Ok, allez-y, vous avez la permission ouverte pour partager l'écran.
Ok, un instant.
Just one moment.
Voilà.
Bon.
Excellent.
Très bien.
Voilà. Yeah.
Ok, merci. Par rapport à la présentation sur les statistiques des opérations financières du secteur public, dont les entreprises publiques, on a un peu le sommaire, le contexte, le champ du TOF, le tableau des opérations financières de l'État, les composantes du secteur public, les sources de données et fréquences de production des statistiques, la production des résultats provisoires.
Can you give us 1 second? I think we lost translation to English.
Sorry, the interpreter had the wrong language selected. Very sorry. Please.
Oh, thank you.
Yeah.
Sorry, Boca.
Yeah. I can try to present in English if you want.
No, French is fine. French is fine because we also have other French speakers. We just mixed up channels, but that's fine. Is our interpreter ready?
Yes, ready.
Thank you very much. Okay, you can continue, Boca.
In French? OK. D'accord. Le contexte, le champ du tableau des opérations.
So the context, the field of activity of the state activities, the components of the public sector, sources of data and the frequency of production of statistics, the presentation of provisional results for 2018, and then the stakes and future perspectives and outlook for the production of statistics of the public sector. The context is we see first in the macroeconomic sector. This was with the MSFP, which was revised in 2014, and then the regional macroeconomic and the harmonization of these and the reform of the finances. And at the national level, we are now members of the NSDD, it's a special section of the IMF, and also intervention into international financial markets on the part of Senegal. Now, the scope of the public sector. Public sector is divided up as follows. First, we have the public administration, and then public state companies. In public administration, we have the central administration, and then local governments, and then social security institutions. The central administration is made up of the fiscal central administration, the various ministries and institutions. Then there are the public administrative bodies. And the director spoke to you earlier. It is in charge of the monitoring of these bodies. Then we also have the territorial communes, 552 local governments and 42 departments, as well as social security bodies that are under the public administration. So that's how the public sector is classified. And now for our data and the production frequency of statistics, The central fiscal administration is in charge of the budget. There's the various budget general directorate, the public accounting, taxes and customs, and the general customs direction. Then we have the general directorship of the public accounting of the Treasury, and that includes the direction of the para-public sector. The data is produced annually. And now for social security institutions made up of the retirement fund of Senegal and the social security fund of Senegal, its statistics are produced annually and they are available at the IMF. Now for the local governments, it's under the general directorship of the public accounting of the Treasury Ministry. It's under the directorship of the local government sector. The source is from the para-public sector. They publish once a year. We've done 2017, 2018, and we are in the process of publishing for 2019. Now for the non-financial public sectors, we have the central, 3 levels. First, the central administration, the public administration, and the public sector, made up of public administration and financial and non-financial public sectors. Here, therefore, are the results of the consolidated results for all of the public sector with the various subsectors of the public sector. In the first column, we have revenue of the, then we have the TOFE for extra budgetary administrative, and these are consolidated in the 4th column, which is the consolidated administration. Then we have Social Security, local governments, and the consolidation of the public sector. Then we have the public companies. For the 17 state companies, 889 billion, and we see 208 billion, and then the net is, you can see it in the far right column.
Boca, I'm sorry, I just need you to wrap up. Thank you.
Okay. Sorry.
You can finish, but please, like 1 minute.
It's already finished. OK. Là, c'est juste un certain nombre d'indicateurs qui sont calculés.
Here are a few indicators that are calculated with our table of indicators for the central administration. We can see the financial and non-financial for, we see 3.7% of the GDP. This is what I wanted to show you today, and thank you very much for your attention.
Thank you, Bokar. I'm sure we already have some questions for our colleagues and how they are doing this consolidation. I think that is the interesting part. We now have, I am not sure if you're ready, Pierrot, because I see that you have already joined. I don't know if you're ready to share your progress in Benin. Tiago? Not sure if he's still here. I think he's having a bit of connection issues because I saw him here and then going. In any case, I wanted to offer the floor also for our friends from Cameroon that are not part of the Fiscal Openness Accelerator project, but we are very glad to have you here in case you want to share your progress right now.
Alors, collègues au Cameroun, nous sommes vraiment contents de vous avoir.
So our colleagues from Cameroon, we're very happy to have you here at the meeting. If you would like to share your information in 2 or 3 minutes about the state companies in your country, you are very welcome, but not obliged. So it's up to you, as you wish.
Le temps qu'ils essayent je veux dire, de rattraper un peu.
Let's see. I'm trying to catch up a little bit. I believe that we've had some connection problems. I think that they are now connected and they will want to take the floor.
Voilà, là, ils sont...
Hello. Hello, everyone. We started recently to follow the work in budgetary transparency. We are working with our colleagues in this area regarding state companies. Thank you for giving us the floor. I am head of the state companies cell at the Ministry of Finance. We have, it's the first time that we followed such a presentation. We would like to be able to tell you about the efforts that we've launched in this area to promote transparency here in Cameroon and how to improve our reporting. Since last year, we have two documents that we have been producing. There's the financial index with financial data about state companies on the basis of data that we collect from state companies. 44 state companies. The difference between public companies, they have public accounting. That is, at the end of every year, they must produce accounts, and the presentation. We have a special auditor that certifies their accounts. We see the results, we see the annexes, and these are sent to the finance ministry. And there they are analyzed. Small detail. To analyze these financial statements, and we enter them into the database of the World Bank. This enables us to produce data about our public companies and do an analysis with tables and a graph. We did not have that tool in the past, and this has helped us in the analysis of our public companies. In this analysis, we we look at the revenue, we look at capital, and we look at various ratios. We compare revenues, etc., with other data, and with the support of the World Bank, I believe that we are moving towards greater consolidation. And thanks to the International Budget Partnership this year, on this basis, we will see how much more progress we can make. This year, we have produced our first general report on state companies. There is a law from 2017 on the status of these companies. We are happy with how things have been going recently. This sharing of experiences and improving our transparency. Thank you so much for updating us on the situation in Cameroon. It's always difficult. You asked you to participate, and of course, that's a lot of preparatory work. Thank you for taking this opportunity. And of course, we will continue to share experiences and invite you to share and participate and have the opportunity to present your own experience and see other experiences that may be inspiration for you. This is our first year with you, but there will be more. Thank you so much for your time. So we will continue. I now will give the floor to Lorena. Lorena, you have the floor.
Thank you very much, and it's great to hear from your progress, and you're more than welcome. We're very glad that you're joining this community for Cameroon. And so right now, I see Mordieu here, and if Pierrot, if you happen to join us at some point or you're listening in some other account that I'm not seeing, please send me a message so that I can give you the floor as well, so that we can have Benin sharing. Please, if you have any questions for Cameroon, for Senegal, or it's still pending questions for Nigeria, we're still open. Okay, and for the sake of time and having time for the presentation and questions, I am giving the floor now to Jason Harris. I am very glad to have you here, Jason, because this is a part of the discussion, and then how to move forward. And for moving forward, we need a lot of technical concepts and expertise as well that I'm sure that you're going to share with us. Thank you, Jason. You have the floor.
Thanks, Lorena, and thanks, everyone. It's a great pleasure to be here. And being an English speaker, it's a real pleasure to hear some of the French experiences in sub-Saharan Africa. Let me just say I've been really impressed by the presentations and some of the work that's been going on in some of the countries. I'll share my presentation. And you guys can see that, I hope. Okay, so at the IMF over the last few years, we've been putting a lot of importance on understanding what is going on in the government's balance sheet. And a big part of that is the state-owned enterprise sector. So in 2018, we put out a fiscal monitor, which had a feature on looking at balance sheets, looking at how large they are, what they're made up of, and why they're important. Now, before I get into that presentation, I thought it'd be good to ask you some questions. It's not something you have to say if you don't want to right now, but some things that I'd ask you. I ask a lot of people when I go to their country. First one is, how much debt does your government have? What is the debt as a share of GDP? And when I go there, I'd say about 95% of people in ministries of finance know the answer to this one. But when I ask the next question, what assets do you have? What are the offsetting assets? Very few countries can come up with an answer of that. How much they are, or even what the large ones are. And of course, state-owned enterprises are one of the largest assets that states have. However, very few ministries of finance know how large they are, how much revenue they have, how much debt they have, or what financial assets they have. One of the things that I've been quite impressed at today is that a lot of your countries do seem to have started doing this work. And I was very impressed to see Liberia's numbers first up. I thought that was a very nice piece of work. Then the next thing we do is we ask, what are the largest SOEs? And usually most ministries of finance will know what the big ones are. But then the next thing that will happen is that they'll say, we've got thousands and thousands of state-owned enterprises. We couldn't possibly understand what's going on. A lot of the work that we found in doing this and in compiling these numbers for countries is that you can focus in on the largest 10 SOEs and generally get the bulk of the picture. Get a very large tail of very small SOEs to complicate things. But if you're an economist and looking for some answers, you can generally look at those 5 or 10 largest SOEs and get the answer. Then the last question for you is, are those SOEs contributing to the budget, paying dividends in, or are they draining from the budget? Are they requiring resources from the budget? Not just in terms of cash transfers, but perhaps the assumption of debt. And how much has that been over the last few years? So there's not anything you need to answer me right now, but have a bit of a think about that. And if you can answer those questions, you're in good shape. If you're not, you might like to progress this a little bit further. So today I'll just give you a very quick run through. I won't go into too much detail, but I'll pass you, I would suggest looking at the 2018 fiscal monitor if you are interested in this. I'll give you a bit of a rundown on the public sector balance sheet, explain why it matters, and I don't think I'll go into too many examples. We don't really have time, but I'll leave you with some concluding remarks. But in general, when we're looking at the public finances, we generally focus on debt and deficits. And we do that at a general government level. So we look at the central governments, the states, social security, and sometimes we'll include some non-market state-owned enterprises in that. But generally, we're just looking at debt. What we've done in this work is expand that coverage to pick up the assets as well. What kind of assets? In particular, the financial assets and the non-financial assets, things like infrastructure. On the liability side, we're also expanding what we look at to include not just debt, but also other liabilities, non-debt liabilities. And the biggest one here are things like pension liabilities, but also things like arrears or payables, unpaid bills that you've still got, which in some countries can be quite substantial. But if you look in the debt numbers, you often won't see them. The second thing we do is increase the coverage of what we're looking at beyond just the central government or the general government to include all of those SOEs and look at both the SOE assets, the liabilities, and the income, the revenues and expenditures of those. The last step, which I won't go into today, is to look at the future, looking at the balance sheet today combined with what the calls on government finances will be in the future under current policies. And that gives us what we call the intertemporal balance sheet, but that goes a little bit further than what we want to look at today. So what we do here is we look beyond debt and deficits to use the balance sheet to provide the most comprehensive view of public finances. We shed light on all of the public assets and all of the liabilities by bringing together all of the existing and newly estimated balance sheet data. Few countries have it, and few countries report it in a consistent manner. But what we've done over the last 5 or 10 years is to compile these statistics for as many countries as we've got. Right now, we've got something like 38 countries included at a public sector level and 75 countries at a general government, but we'll be updating that and releasing a new database in June of next year. Then we take those data and we use it to say, well, what does it matter? It's great to collect data. It's great to have it there, but does it actually matter? And what we found is that it absolutely does. There's a huge macroeconomic relevance of balance sheets, showing that we find stronger balance sheets lead to lower sovereign yields or interest rates that governments have to pay, much more economic resilience. So if you have a stronger balance sheet, you can absorb shocks. And we're going through one of those shocks now in the COVID. And there's a huge potential for increasing government revenues from their assets. And what we've done is developed and applied a conceptual framework for assessing balance sheets to improve fiscal policy and to better manage fiscal risk. Some of those were mentioned today, such as guarantees from SOEs being realised. Now, let's go back to the question that I asked. How big are your debts? On average, across all of our countries, we find that the general government debt is around about 95% of GDP. Now, this was back in, I think, 2016 at this point. I think it's probably a little bit higher now. But on average, governments have about 94% of GDP of debt. And that's a fairly commonly understood amount. What few people realise is that government assets are significantly larger than that. They're around about 216% of GDP on average across the countries. Now, this varies a lot. Of course, some countries have huge balance sheets, some countries have relatively small balance sheets. But what we find are that government assets are larger than debt, significantly larger than debt. But there are large liabilities that are outside of government debt. So things like the pension liabilities, but also public corporation liabilities, arrears, and those kind of things. And so on average, what we see is that assets are larger than liabilities on average, leaving positive net worth of countries. But many countries, that is certainly not uniform. When we look at what the elements of those are, what are these assets? I won't go into all of the details, but you can see on the left-hand side, these are the public corporation assets that governments have. So these are all of the countries that we've got, and this is how large their public corporations are. On average, we see their assets are worth something like 78% of GDP. So huge part of what the government has, a huge resource that the government controls, and something that has very little reporting on. So when you think about the detail that we provide in the budget, budgets generally around 20 to 30% of GDP of spending. Public corporations have assets that are about 80% of GDP, yet if you are a citizen and you go to pick up and say, what's going on, you very rarely can actually get a good picture of that. And of course, you see Senegal has one of the smaller public corporations. Japan has one of the largest at about 250% of GDP. So it's a huge part of their economy. We've done a lot of balance sheets through Africa. I think we're up to about 9 or 10 now countries. In the balance sheet database, there's about 5 or 6, I recall. South Africa was one of the first ones. That reflects the quality of information that's available there. And then you can see that in South Africa, they've got assets in the non-financial public corporations of about 50% of GDP. And then financial public corporations have about 70-odd% of GDP. So you're looking at about, I'll do my maths, give or take, around 110% of GDP worth of assets. And then on the liability side, something about the same there. Now, I don't know if many of you have seen what's going on in South Africa, but the public corporations over there have been causing a lot of issues over the last few years. Eskom, South African Airlines, all of these have been a huge draw on the public purse. And it's really important. They provide a very good illustration of why it's important that not just that you have the data, but you analyze it, you understand what's there, because within those public corporations are huge exposures to the budget. And what that means ultimately is that if there are a draw on the budget, needing to bail out public corporations means that there's a dollar or a rand less for education or health expenditures. So this is really important stuff. Now, let's look at those balance sheets across countries. We went through that on average they have positive net worth, but that is not a uniform story. Many countries have negative net worth. And so if there were corporations, they would be regarded as insolvent. But states are a little bit different because they have this power to raise taxes into the future. So it's not necessary that states have positive net worth, luckily. Some of the countries here have exceptionally large negative net worth. Portugal, the United Kingdom, there are 2 countries that were hit particularly hard by the global financial crisis. And some of the countries on the right-hand side that have very positive net worth are those countries that have really large natural resource assets. So that's something that's fairly common across much of Africa, at least large natural resource assets. Norway, Russia, Uzbekistan, my country, Australia, they're not necessarily rich because they've done excellent fiscal policy over the years. It could just be that they got a very big endowment when they were drawing the boundaries of the countries and got large oil, iron ore, or gold resources. But they are important assets of the public as well, and in many cases are run by state corporations. Now, looking in at the SOEs, going on that point of how do you collect this data? How can you pull this together if there are so many? One of the countries that we were told it would be impossible to do this work on was Italy, because they've got more public corporations there than you could even count. I can't even remember what the number is, but it's in the thousands. So someone said, just give it up, don't even try. When we did the work, we found out that if we collected the top 8 public corporations, then we pretty much had 100% of the sector covered. So while this can be an overwhelming exercise to do if you're starting down the path of understanding what your public corporation sector is, if you do this for those, if you identify those top 5 or 10 companies, there's your answer. And you can go through, and the large ones generally will have fairly good financial reporting, usually IFRS. There are a few countries, we did this in the Gambia and even found that the companies there were reporting on IFRS standards. So the information is there. It's not always published, but ministries of finance usually can get your hands on this information. You're the ultimate owners. So if you can't get your hands on this information, it can be a bit of a concern. And so Google does a lot here, and then working with the companies, banging on doors can help you get this information. I won't go into how you process this. That's something for a more detailed technical assistance mission. But the important thing here, I've done about 25 of these now, is don't sweat the small stuff. Focus on the big picture and get a big answer, and then work on refining it rather than trying to be universal. Now, why do you bother with all of this? Well, the first is that if states have such large assets, what do you want an asset for? Well, you can provide a service with, or you can get a return on it. We have large financial and non-financial public corporations. They should be generating returns. There's a risk associated with holding them, so there should be some return. What we found when we did a survey of the returns that countries are getting on their non-financial public corporations assets is it's pretty abysmal. I think the median return was 0.6 annual. Now, if I was an investor, I'd be pretty upset at getting that kind of return. You're not even covering inflation with that. Now, there are a lot of countries that are getting positive returns and getting very strong returns. And a lot of that comes down to the governance arrangements and the expectation that they run on a commercial basis to generate a return. So when we looked at it, we said, well, what kind of return could countries get if they manage their SOE sector a little bit better, and brought it up to the 75th percentile. So not necessarily the top, but if countries lifted from the second quartile to the third quartile, what kind of return could you get? And the answer there is you could generate about 1% of GDP of extra revenues a year. That's not an unsubstantial amount. That'll buy a lot of good public services or prevent the need to do cutting elsewhere in the budget if you're in an austerity. We also looked at government financial assets, which are very large indeed, and also earning quite low returns, and looked at what the better countries are doing and found out that you could generate an additional 2% of GDP. So if governments did a little bit of work on their commercial and financial assets to improve the management and the returns on those, there's potential for about 3% of GDP of extra revenues. Now that's equivalent to what governments are generating in company income tax across the world. So quite a large amount. Here's that distribution of SOEs returns. So you can see there's quite a large number of countries who are earning negative returns on their SOEs, i.e. they are the drain on the budget. In some cases, about 4% losses relative to asset size. But there are a lot of countries who are just earning subpar returns, and a couple of countries that are generating very large, I will note that Norway's oil company is one of those large ones, so I would also take a little bit of a grain of salt, but it is possible for oil companies to generate returns for the state and provide revenues to fund the public finances. The second thing is that countries that have stronger balance sheets pay less for their debt. What we find is that countries with, if we just look at debt alone, 10% of GDP worth of extra debt will add about 10 basis points to your interest cost. However, if you have an extra 10% of GDP of assets, that will reduce your interest cost by about 8 basis points. So that can be quite a significant saving on governments. And when you bring all of that together, an improvement of net worth by about 10% of GDP will reduce interest costs by about 7 basis points. So quite a significant saving when you apply it to that 94% of GDP worth of debt that most countries have. The last reason why we think that stronger balance sheets matter is that they give governments more flexibility to react to shocks. If you have a large asset base to draw on, you won't necessarily need to go to the market to borrow to fund extra activities or stimulatory government spending. And that's something that we're seeing now. Countries with strong balance sheets are being able to use those balance sheets to support the private sector, support wage subsidies, and support those who lose their jobs. And so what we found when we did our analysis is that countries with strong balance sheets could boost their expenditure after a crisis. You can see those in blue are the strong balance sheets, whereas those with weaker balance sheets couldn't really do a lot. And that after about 3 or 4 years, they had stronger balance sheet countries had a much better response in terms of GDP per capita following these. So countries with stronger balance sheets are much more resilient to shocks. So the report that we provided back in 2018 shows the benefits of public sector balance sheet analysis. It gives the most comprehensive view of the public finances. It helps governments identify and manage risks, and particularly those within the SOE sector. It also provides a much better framework to evaluate policies, and there's real macroeconomic relevance towards it. Really importantly, though, it's not just about policy, it's about transparency and accountability. Those public assets are very large. They're an important part of the public finances, and they're ultimately owned by the citizens of the country. It's important that governments are clear on what those assets are being used for and whether they're at the service of economic and social goals, and to provide accountability to citizens and creditors as well. So what we recommend for countries is to start compiling these balance sheets. And one of the things that I was really happy about today is that the steps that have been taken by all of the countries who have presented on putting together that information on state-owned enterprises, they're often the weakest part of the reporting on balance sheets. We suggest that countries begin performing some basic balance sheet analysis and over time improve their statistical and accounting practices so that this is just a standard part of your fiscal reporting and becomes a standard part of your budget analysis and economic analysis. That's all for me. I hope I haven't gone too far over time, Lorena, and I'm happy to take questions if there are any.
I think that's not all for you because we already have one question here. Thank you, Jason. Always speaking about balance sheets opens a bigger picture on reporting. So I hope you can ask your questions right now and take advantage that we have Jason here. I have a question already from Johan from Cabri. Johan, you have the microphone too, so you can ask it directly.
Thank you very much. I just want to ask Jason a question. I mean, it's just when he went through his presentation, how do you, I mean, putting together a balance sheet or having a balance sheet type of approach, it's always difficult to price your non-financial assets. How do you put a number to that? Because, I mean, some of our state entities at this stage, we think it's more liabilities than assets, looking for that perspective. So I just want to have an understanding of pricing a non-financial asset. What do you?
That's one of the more challenging aspects of this. There are a few different approaches to valuing non-financial assets. Let me say that the most common used at the macroeconomic level that we've operated at is the perpetual inventory. So that's a statistical way where you sum up all of the capital expenditure that's happened and take away the depreciation, and you're left with a statistical estimate of the capital stock. That's not the best way by any means. The IMF, the GFS, the Government Financial Statistics, suggests to use market-based pricing where possible, and IPSAS provide the guidance on how to do that. Some countries have gone the full bore market valuation of these things. And again, my recommendation with this is to start with the major assets and do that there. Now, there's a little bit of question mark on how to do it. Do you do it on a historic basis? Do you do it on a replacement basis? Do you use it on a future cash flow? Different assets require different approaches, and the accounting IPSAS provide the different approaches to doing that and when that's appropriate.
Maybe from the countries here, maybe you would like to share, and if you don't have questions right now, but if you would like to share, if you're using maybe perpetual inventory, or if you're using market-based pricing for valuing your assets, that would be a great addition if you could share that right now. Laura, I think you have a question here. You have the microphone.
I was just asking if, Jason, do you recommend to look at a specific report? Like, I really think the insights you just gave on macro benefits and the shock resilience benefits are very useful. So, especially in the more recent shock that we've seen and the last couple of graphs that you've shown, if we can look deeper into these subjects, it will be very interesting. I think you just did. Let me check.
Yeah, that's right. So the best report is the IMF's October 2018 Fiscal Monitor, which was titled Managing Public Wealth. And that's got all of this analysis and all of that in there. I've just put up a link to an IMF page. Doesn't have the www, but you can put that in yourself. That's a page that has all of the balance sheet data, so the full public sector balance sheet, which has those around 40 countries plus 75 countries with general government balance sheets. So you can have a look if your country's there. Senegal's there, South Africa's there. I think there'll be some more of these countries that are added to that when we do our update in June next year. And you'll also see in there a set of papers where we've gone a bit deeper. So you'll see some of the country-specific work that we've done. A very nice example is one that we've done some in Africa. They're not public, unfortunately. The Ghana one is on there, but we've done one in Georgia very recently, a place where Lorena is quite close to where Lorena is hanging out. And that's a very nice example of the kind of work that can be done with the balance sheet and the state-owned enterprises in particular. The IMF has also done some very nice work. There was a state-owned enterprise fiscal monitor in April of this year that has gone into some details on that. And we've just released a working paper and a fiscal stress test tool for state-owned enterprises as well. So there's some really interesting fresh work coming out that I'd recommend taking a look at if you have time.
Excellent. I wanted to check maybe if Bokar or I see that we have Pierrot finally here. I am not sure if Pierrot would be ready to share their progress. And if you're not having more technical issues.
Pierrot Sego du Bénin, si vous avez là la chance de partager brièvement votre expérience.
If you're able to share, we want to be sure that you've had the opportunity to express yourself. Thank you.
floor is open for questions otherwise. And if you would like, we are really interested on how you're managing and quantifying your assets and how you're using these balance sheets for your reporting. For here, maybe people from Nigeria that have a lot of progress that you have shared. Or you maybe want to take a look at that before you come back to us on this. We still have 2 more sessions that we're going to have on Thursday and next Thursday. So don't worry, you're going to have a chance to take a look at this and maybe you can share afterwards. Okay.
Can I ask a question?
Sure,
I mean, just on reporting in general. I mean, it's very important that you understand for what purpose you want reporting on. I mean, you can be very comprehensive on reporting on, especially for budget, or I mean, and it's also very important that you distinguish between what is budget reporting and what is because state-owned entities can be different. I mean, like Nigeria, there's different classification. I mean, you have fully funded, partially funded, and borrowing on their own balance sheet. So when you look at reporting, I mean, you have reporting for budget purposes, and then you have reporting for that's more for guarantee purposes. So if you want, especially when you analyze these type of reporting, that you can get useful information from that reporting, that you can at least generate or analyze something that you can that's useful for policymakers or decision makers, that you can at least base decisions on that. Is a reporting in a bad stage? What can I get out of my reporting? So if you just report for the sake of reporting, it's not going to be very useful. It's just a comment that I want to make.
Jason, would you like to respond on that? Or?
Yeah, absolutely. I mean, the reporting can be for a range of things. As I said, one of the key aspects that we think is the transparency. If you look around the world, a lot of corruption that happens these days doesn't happen, in brown paper bags, although there's been a recent case in Australia where that is how it happens. A lot of it happens through use of assets, allowing those who are connected to use assets. We saw issues in Malaysia. There are many examples in Africa where government or public assets are being used for private benefit. So transparency is a key one, and accountability. That's kind of the most important aspect. I think a second area that we think is really important is in the fiscal risk element. And I think you'll have some more discussion on fiscal risks next week, but understanding what exposures the state has and what the future calls on the government budget may be. That's very, very important. And then the general day-to-day budgeting, how much is going out through the budget to these entities? What are they using it for? Are they making losses because they've got a mandate to provide services that are below cost, as many electricity producers are? So understanding the day-to-day operations and what that implies for state budgets is another very important area. So there are 3 different things. But I think what the work that we found is that there is a macro relevance to this as well. So the statistics, it doesn't go into the details for this, but pulls together the information and lets the government know what their overall position is just as important as the micro level information.
Thank you, Jason. And since I am not seeing any more hands up, and I am sure that there are still questions, but we are open to receiving questions by email so that we can follow up on the technical assistance we are also doing with you and with the different countries. Don't forget that on Thursday, we have another session. Our next session is going to be also very interesting. We're going to have TV Hira from the IMF sharing now the SOEs health check. We're going to look into gaps in recording, monitoring, and reporting of reliable and comprehensive transactions of SOEs. So we're going to have that as well. And we're also going to look with Cabri at the work on FMIS that they're doing with many countries in sub-Saharan Africa. If we want better reporting, we need better data, and we need better data flows, and systems become even more and more important. So we're going to have a part of the section dedicated to technology, FMIS, and how this can be used for consolidation of SOEs. There we will have the example of South Africa. Sheila Tipe from the National Treasury will be sharing with us how they are consolidating SOEs as part of the financial statistics and budget reports. And we hope we can have as well Nigeria. I'm not sure if they have already confirmed, but we want to see more in depth on their GIFMIS, how it works for consolidation. So I think that we can also open the floor next session on Thursday for those that had some technical difficulties for joining, and we can manage the agenda and figure out how this will work. But we do want to hear from all of you. So this is all for now. We really want to thank the IMF and AfriTac from the IMF. We really, I think this last presentation was very useful and very insightful. Cabri, we're very glad to be doing this in collaboration with you as always. And of course, the State Department, who is supporting also this Fiscal Openness Accelerator project that we're doing for accelerating public participation in the budget process. That needs, of course, fiscal transparency, which brings us here. With this, I thank you all, and I hope to see you all soon. Remember that we're gonna share this recording so that the ones that could not be here, we understand that it's exactly your budgeting time and discussions in Congress for many of you. So we're going to open as many sessions as we need, and we can have follow-ups, and we're going to share these recordings with all of you. Thank you again, and I don't know if Juan Pablo, do you have anything to say? I would leave you.
Thank you, Lorena.
Thank
you, Lorena, for organizing this, putting it together. It was a very good discussion, and again, reiterate on behalf of IBP and GIFT, your time and engagement. We'll see you soon. Thank you.
Thank you.